we can get to the inflation numbers which we are waiting for. Those numbers are out.
It's 5.05.
I mean, that's a really good number that we are getting on the wholesale price index. Our poll had thrown up 5.5% at 5.05. This is a damn good number, and a lot of it is due to food articles. That inflation has come at 8.8%, significantly lower than the 10.4% or thereabouts that we saw last month. So the biggest decline is coming because of food. Manufactured products index is coming in at 2.76%. It will take a little while to calculate the core WPI, but the important number that we have to watch out for is this 5.05. For the month of November, the inflation rate has remained unchanged at the provisional level, so 7.5% it is. That's also important because for the past 2 months we have been getting a revision which has pushed inflation much higher, sometimes even half a percentage point higher. So important that the January WPI is at 5%. I mean, we can ignore that 0.5. It is at 5%.
And just 1 point, manufactured products inflation has gone up to 2.76 versus 2.64%. Wouldn't that be a precursor to what we can expect in terms of core inflation for WPI?
No, we cannot be very sure because much will depend on how the manufactured food products behave. If the manufactured food products fall significantly, then you'll have a higher core. If they don't fall much, then core could be, very similar to the 2.8 that was done last month, that is for the month of December. So the important point is this is a number which the Reserve Bank is not watching, yet it forms a complex of things which make up, the feeling on inflation. And as you can see, there is a minor downtick that you are seeing in the yields at 8.78% now. Joining us are a band of prominent economists, Soumya Kanti Ghosh, Chief Economic Advisor to State Bank of India, and Madan Sabnafis, the Chief Economist of Care Ratings. Jayesh Mehta, the Managing Director and Country Treasurer of Bank of America, is also with us. Gentlemen, thanks a lot for joining. Soumya, you go first. 5.05, better than you ever expected?
Yes, actually we are also expecting that the WPI should go below 5.5 and from that point of view it's a very welcome departure, but I think as far as if I look at the data, I believe that the core WPI may have inched up a little bit. Maybe it has touched 2.9 or 3%, that is my hunch. So if that is the case, that's the only point of concern, but it's a very impressive number and we believe now it could be sub 5% in the next 2 months.
Okay, but you were going with a 5.5% expectation?
I was going with an expectation of 5.4%. So I think that we are going with an expectation of 5.4 based on food prices, but I think now the cereal prices may have also declined significantly. So that may have pulled down the WPI to 5.05% level.
Yeah, there is a year-on-year and a month-on-month decline in cereal prices. Latest month-on-month, the decline is 0.2%. That's month-on-month. So cereals year-on-year is up 9.2%. But as we've been telling you, food articles is 8.8%. That's much lower than I think the 10.4% that we were having.
Absolutely, but just a word on the markets, Lata, because that deserves attention. That little bit of an incremental rise is what we've seen on the Nifty. So currently at the high point of the day, up around 0.4%, definitely appeased by the WPI inflation numbers, and not to mention the yield also, which has softened to 8.78 versus 8.81 that it was trading pre-WPI inflation.
If I may interrupt, I think the core number has come. The January WPI non-food articles inflation is up 0.1%. I would assume that is what they refer to as core. So that would be 2.9.
2.9.
That's what Soumya was saying.
So that's no respite on core inflation.
Not much.
And it's gone up from the 2.7% level that we saw in November all the way to 2.9. So there's a gradual inch up, which we've seen in core CPI as well.
Absolutely. Well, Madan, first thoughts?
No, I think it's very good news that the WPI inflation has come at 5%, because we were looking at something much higher than that. And I think it's quite evident that we have seen a decline in inflation rates across all the three major categories. And going forward, I think we could expect to see similar trends. But then I think, as you had mentioned earlier, I think this is no longer on the radar of the Reserve Bank of India. And in terms of any kind of policy response, it's going to be more of the CPI rather than the WPI.
Jayesh, just coming to you in terms of the yield reaction for the WPI inflation figures, It's currently at around 8.81. Momentarily went to 8.78, if I'm not mistaken.
Yeah, I think we are getting all the positive news. If you really look at CPI number was good. We are not getting impacted so much on the currency side. In fact, currency would have appreciated if the government banks were not buying for oil companies and stuff. But and WPI coming up so down, but I think market positioning wise is quite cautious, especially the it's if you look at the market segment, you have local banks whose year end has coming near to 31st March, and you have foreign banks who started the first month and the last week of first month was pretty bad. So I think the market appetite and cautiousness is what is creating the issue at this juncture.
Okay,
So,
well, no,
news flow.
Yeah, I agree with you, Jayesh, though we want to prod you a lot more on the market borrowing and the VOA issue, vote on account issues as well. We are coming to that in 1 minute. Just let me wind up this WPI argument, which clearly is not on the RBI's radar, and so to that extent the good news is getting diluted. It's not lost on the stock markets though. Well, Samyo, what is your trajectory for WPI for the year? And what is your trajectory for CPI for the year?
See, I will just go with the CPI first. So in terms of the CPI, now that the cereal prices trajectory for WPI has been sharper, and given that there is a lot of similarity in the WPI food and CPI food in the last 2 months, if you just exclude the manufacturing food prices, from that point of view, looking at a CPI trajectory, it should be closer to 8% by March 2014. But the bad news is that if you look at, there are 3 things which are worrying in the CPI number, which was released a day before the WPI has been released. The first thing is that the core CPI is again edging up, and it is, even though the CPI has been declining. And if you look at the core CPI average and the current core CPI, which is 8.1%, the core CPI is actually trending. The average level is it is higher than the average. So basically, the downside to the core CPI will be limited in the next couple of months as the summer sets in. So even though the core CPI may even though the CPI may decline to 8% by March 2014, beyond that, I think the downside to CPI will be limited, because the core CPI number, the lowest number which we have ever had, is 7.7%, and even if we assume that it declines from the current 8.1 to 7.7%, that would only have a 20 basis point or odd impact on the CPI.
Your short point is that core CPI,
of the CPI,
core CPI remains high.
Remain elevated.
Okay.
Yes, and in terms of the WPI, I think that's a good number, and we believe that the March 2014 number could be similar to the 5% levels which we are currently looking into.
Okay, Madan, just wanted to come to you for